Is that with a couple of small and fairly esoteric sounding changes to pension law, it will enable companies to say they have more money than they actually do, which will then allow companies to use that money for other things?
That's exactly right. And we don't make this up on the basis of conspiracy theory. We make this up on the basis of actual examples. So if you look at the situation of Air Canada, for example, Air Canada was given more flexibility in their pension funding when they filed for bankruptcy protection in 2004. The workers there took massive wage cuts in the magnitude of 13% to protect their defined benefit secure pension plan. They were told that would happen. What's happened since Air Canada got that flexible pension funding in the 5 years since, they have paid out massive bonuses to executives, both to Robert Milton and Monty Brewer, who got severance packages of $46 million and $32 million respectively. They've sold off $2 billion in assets. They've split the company into 5 parts, and they've underfunded the pension. The pension plan today at Air Canada is underfunded to the tune of $3.2 billion. So for us, this is a cautionary tale. When you allow employers more flexibility with their pension funding, with no obligation to be regulated, with no mandate from the government side to say you can't lavish executives with pensions, with severance, you can't massively sell off assets of the company. You have to maintain your pension promises. When you give people flexibility with no oversight, we worry that pensions will be lost in the collateral damage. So our view at the moment is that we have examples at Air Canada, and there are other employers, that suggest permanent, across-the-board, weaker pension rules are not what we need right now. We need stronger pension rules. We need an improved Canada pension plan. We need measures that will help people have more pension income and more pension security. Sadly, what the federal government's discussion paper suggests is that the government is actually listening to the employers now and inching in the other direction. We are confident, though, that our activism from our members can be unleashed to, if not change the government's mind, change the government.
We've seen an article in the National Post today, which I think is fairly consistent with the government's point of view, which says that insuring a company's pension plan will act as an incentive for companies to be irresponsible because they know they'll be bailed out by the government. Well, how do you respond to that? Is that what they've done in the United States?
Well, yeah, essentially, if you take the American model as an example, we do see situations where whole industries, like the airline industry, have used that pension insurance fund to cash out on their pension obligations. And we obviously don't think that's an example to follow. But it is duplicitous for the National Post to be arguing that there should be insurance for certain things like bank deposits, credit union deposits, home insurance, auto insurance, and that these things should be compulsory. It's hypocritical for them to agree with that and then for them to turn around to pensions and to say, well, they should just be collateral damage. Whenever the market tanks because of a banker's crisis created by fictitious capital and people playing around with other people's pension money on stock markets, whenever that happens, well, we're just going to let pensions wither on the vane. For us, we think that's hypocritical. The National Post has to be consistent. The corporate community has to be consistent. They're also inconsistent, I would add, when they look at how they fund the pension rights of their executives. If you look at the average executive pension in this country, the average executive pension for the top 100 firms is $930,000 a year in a defined benefit plan, a rock-solid plan. We think it's hypocritical for employers and the federal government to allow a pension system to exist that lavishes executives and cheapens the workers. We think the workers are the people in the country that create the wealth. They make Canada work. They make it a great place to live. And it's unfair during an economic crisis to turn around to workers and say, you're going to pay for this crisis by having a weaker pension, by having fewer public services, by losing your job, and to leave the executives out here on their own, the people who caused this crisis, and not force them to have to play a role in cleaning this mess up. So our view to the National Post and to the federal government, which so far has bought into this laissez-faire, fend-for-yourself economics philosophy, it's time to change course. We live in a new world. We live in a world where conservative governments are regulating banks, where conservative parliamentarians in other parts of the world are saying enough is enough, we have to shore up pension plans, and Canada shouldn't be this Boy Scout of, Milton Friedman-like fend-for-yourself economics at a time when it's going to hurt and damage the people who make Canada great, the working people.
Finally, on the subject of fending for yourself, the Conservatives, the employers have been pushing for defined contribution pension plans where employees know how much they'll put in, but they don't know how much they'll get out. the labor movement wants defined benefit plans where workers know how much they'll get in retirement. Can you explain the difference between the two positions?
Yeah, there's two types of pension plans generally. It can get a bit more complex because they can be delivered in different ways, but defined benefit plans are one type, which is most common, 85% of pensions, where by a virtue of a calculation in your collective agreement and your pension plan text, you can reasonably predict what you're going to make in pension based upon your years of service, your best average or career earnings, and a certain percentage. Defined contribution plans are a lot like group RSPs. They are linked to the market. So the amount of money you can expect in pension depends upon when you retire. The interest rate that prevails at the time depends on how much money you've earned in your investments. And our study that we just released showed that if you retired in June 2009 versus June 2008, excuse me, versus February 2009, the difference in your pension was 51%. So people are effectively playing the casino when they work within the RSP and defined contribution rule. And that's been one of the big shock absorbers for this bankers catastrophe. People's RSPs have been ravaged. That's who's been paying for this latest crisis. It's not been the bankers. It's not been the people who caused it. So we support defined benefit coverage because it forces the employer community, it forces finance to think long term. They can't play with people's money like they ought not to be able to, and allow our pension plans to, as John Stewart recently said, to capitalize their adventure. We need to have pension plans that think in the long term. And that's one of the reasons why we believe that the best policy solution right now to increase pension income is to improve one of the most hopeful defined benefit plans in this country called the Canada Pension Plan. It's a defined benefit plan. 93% of Canadians are members. If you improve the Canada Pension Plan, you will improve pension security for almost all Canadians. So it's one of the reasons why the labor movement has, yes, we've been working to try to protect our defined benefit pensions that we've bargained for, but we are vociferously fighting for an improvement to the Canada Pension Plan because it will help relieve some financial strain off our pensions, but it will also help everybody. And ultimately, that's what the labor movement believes in. We believe in lifting everybody's boat, and we think the federal government has an opportunity. 2009 is the year where they're reviewing the CPP. This is an opportunity for them to write their names into history, not on the fend for yourself economic crowd, but to look themselves in the mirror and to say, you know, we're going to improve the pension security of all Canadians by improving the Canada Pension